Hi guys, welcome to another episode by Amateur Investor. Today we're gonna have a look at something a bit interesting because the market has been dropping. It's gone down roughly around about 10% or just under at the moment. It did drop down to 10%. Um, so yes, this is SPY, but essentially it mimics the S&P. Now, just before we go any further, just a quick disclaimer. Uh, this is not a please invest in a certain share. I'm not a professional, so please, anything that you see on this channel, do your own research before you do any purchases. Now, as we keep going, if you have a look at the S&P over the last 3 months, not too bad down here and to the right, not too much red. Um, over the last month, um, again, not too bad over to the right here, but as you can see, Tesla's dropped 30%, Amazon, Apple, Nvidia, Google, Meta, Microsoft hasn't been doing as bad. That's the weekly performance. Stock has rebounded a bit. So again, just over the three over the 3 month performance, if you have a look at Tesla, there's dropped by like close to 50%. Um, so what I want to do is have a look at something a bit different than what I normally do. So as I mentioned earlier, S&P's dropped by about 10%. So with this drop, we're in a minor correction territory. So what are potential stocks that we might be interested in during this time? So if we have a look at the USA, going into Finviz and doing the screener, um, if we have a look at the fundamentals, sales, earnings per share, and sales. So it's either past 5 years, over the past year, and so on and so forth. Um, and we're gonna put in a return on investment of over 5% and gross margin of over 5%. We're gonna add something additional to this, a quick ratio of over zero point 0.5. Now, for those of you who are wondering, a quick ratio is an indicator of a company's short-term liquidity. The quick ratio measures a company's ability to meet its short-term obligations with its most liquid assets. So short-term debt with short-term cash. So cash in hand that you can pay off your short-term debt. Uh, Again, that's something new to this channel that we need to add in to filter through. And also, we're going to look at the performance for the quarter over the last 3 months as a positive and performance over the last month as a positive. Again, going back to the overall, so past 3 months we were in negative territory, and past month again we're in negative territory, especially for the past month. You'll see more red here. So that's why we've gone for those two screeners for the technical analysis, and we end up with 34 um, potential companies that we might be interested in investing. And today I'm going to look specifically at TradeWeb Markets Inc., ticker symbol TW. Now, it's done something that's very different to the S&P over the last month, or it's actually gone up, surprisingly. So we're gonna go into a deeper dive and see what the potential reasons might be. So if we have a look at Yahoo Finance under TW, so if you scroll down a bit further, you'll be able to actually compare TW versus potential competitors. Now, how we pick out those competitors, TW in their annual report has actually specifically stated who their competitors are. So, Market Access being one of them, ICE being one of them, and I think the other one was Vertu. Yeah, there we go. Um, so ICE Market Access and Vertu are the three that I'm going to compare against TW. So they've actually stated this in their annual report. You can go into their website or type TW annual report in Google and that would pop up. Just a bit of background for TW. Um, they are a leader in building and operating electronic marketplaces for global network of clients across the financial ecosystem. So essentially, it sounds like they're a trading platform for their clients, and they specifically include many of the largest global asset managers, hedge funds, insurance companies, central banks and dealers, proprietary trading firms, and retail brokerages. Um, they have a range of asset classes, including rates, credits, equities, and money markets. So that's slightly different. That's why I didn't see Interactive Broker, who's a share trading platform, as one of their key competitors. I suspect that it's because they add rates, credits, and money markets into their platform as well. So those are their competitors. And when you compare the stocks, so Market Access, Virtu, and Intercontinental or ICE, um, having a look down here, I'm not getting a huge gauge of, to be honest with you guys, anything that pops out except maybe Market Access. It's negatively performing, and Virtu is actually performing really well compared to its peers. Later on, you'll see why, because the revenue growth is double that of TradeWeb. So keep that in mind. Um, so as we go down to have a look, the PE ratio is really low for Virtu compared to TW. So the margins, the only thing that might be a knock on Virtu is that the profit margin is a third of TW. Again, going down a bit further, um, the spotted, there we go. Earnings per share over the past year, Virtu's actually performed really well. Now, let's have a look at Virtu, the revenue. So, yes, the revenue did pop up compared to 2022. But if you have a look back in 2021, it's actually the same revenue. Um, the other thing that we're going to have a look at is in the balance sheet, the total assets, the current assets, cash and cash equivalents at 870 million compared to the debt at 5.7 billion. So that I'll get to TW in a second and why I'm looking at that. So just remember total debt at 5.7 billion versus cash of 870 million. Now we're gonna have a look at ICE. Revenue is actually doing okay. It's gone up. Now let's have a look at the balance sheet. The total assets, current assets, cash and cash equivalents, 1.3 billion versus the debt of 20 billion. Now let's have a look at TradeWeb. All right. Now TradeWeb, the revenue has gone up and it's a positive trend since 2021. It's actually gone up by 70%. Now let's have a look at the balance sheet. The total assets, current assets, cash and cash equivalents at 1.3 billion versus the total debt of only 35 million. So to me, based off of the current assets, cash and cash equivalents versus the total debt, even though Vertu has been performing really well in the earnings per share and so on and so forth, um, TradeWeb for me seems to be a safer bet because it's got cash that outweighs the debt. So broadly, that's how I would look at it. Um, and potentially, personally, I'll do a bit more research into TradeWeb to see if it's a good bet moving forward. Hopefully that helps you a bit in terms of how to potentially break down a bit further in your own investment analysis and looking into the annual reports and comparing company versus similar companies in the market and letting you determine how to move forward with your trade. Thanks for watching. Please, if you like this video, click like, share, and subscribe. Thanks. See you next time.